What's up, YouTube? Welcome back to another episode of KJ the Investor. This is yours truly, KJ. Without further ado, let's go ahead and hop into the portfolio. What just happened today, guys, in the market? What just happened today? Clearly, you seen the market went from red to somewhat mediocre to absolutely green. I'm going to tell you exactly what happened. Excuse me. Now, as you see, looking to the investing account, we're at $59,261.78. But if you look at the small green number below that, you'll see that we moved up in value today, almost $1,000, almost a band. $942.42 or 1.62% we made today in the market just by doing what? Being patient, just by waiting and seeing what the Federal Reserve was going to do in their meeting today back at 2:30 this evening. Now, as you guys may or may not know, I don't know if you guys pay attention to it, but the Federal Reserve had a FOMC meeting it always is a 2-day meeting, and they had the part one yesterday on Tuesday, and then they had part two today on Wednesday. And so they were also telling us that, they were also discussing the ideas of the economy. They're discussing ideas of the tariffs. They're discussing ideas of what was going on. And the guys at the meeting, I don't know if you got a chance to see the meeting live, but if you didn't, here's a rundown or a recap of what really happened. So the guys at the meeting, and like I said, guys, we're going to get into the portfolio. I just told you what the investment account looking like. I'm going to show you the traditional IRA account, and then I'm going to show you the total of what we got going on right now. But let me just get this information out because we're talking about the Fed funds meeting today. So anyway, guys, just hold on to your hats, hold on to your stocks, man. Hold on to your ETFs because I knew all we needed was some good news, some type of positive reaction to what's going on in the market, and we were going to take off. And that's exactly what we got today. Investors needed good news. And y'all, today was the news that we needed was today. So Jerome Powell, Federal Reserve, came out, and I mean, what did the people do that was asking him all these questions? They blasted him with questions, blasted him about 47. They blasted him about the state of the economy. They blasted him about what the Federal Reserve is going to do. They blasted him and blasted him and blasted him and tried to get him to say and do and get all off topic. But what that man do? That man was smart. Jerome Powell stayed on topic. He didn't get off on what nobody else was saying about 47. They kept asking questions about President 47. Do you think this is right? Do you think he doing this? What he doing with this tariff is right? He didn't care about the tariffs. He didn't care about what 47 was doing. That man didn't even mention 47. That man didn't answer no question about that. That man stayed on topic. And he said the potential, we see the economy, we see the environment is hostile, it's volatile. And the potential for 2 rate cuts this year are on the table. Man, y'all, guys, that's all the market needed was a glimmer of hope, some good news. That lets us know that the federal interest rate, guys, might be coming down. Now that we know that it could be coming down, inflation coming down, they're going to reduce short-term interest rates since inflation is steadily coming down. Man, that's all we needed to see. And that's the good news that investors needed to stop this bleeding in the stock market. We needed this news to stop all this panicking, all this panic sale, overselling. Tom Lee Ben said that the market was oversold. And we've seen the examples of that. You have institutional investors, you have big index fund, hedge funds selling off millions and hundreds of thousands of dollars worth of stocks and ETFs and shares of this and of that. But guess what? like my mentor Richard Fain said, you seen how when people riding in the back of those ambulances going to the hospital, they need to be resuscitated, and they get those 2 paddles and they charge them up. They put them on their chest. They say clear and drop them on their chest, and then boop, boop, they just shock them back up. That's exactly what the Fed did to the investors and to the stock market today. They took them paddle shifters, they charged them up, they dropped it on the investors' chest, and they shocked us back, man. We are back. We didn't recover everything that was lost in March. Of course we're not, because that was a lot that, the market sold off down 20-30% deep into the correction territory. We were in correction territory, and a lot of people kept telling me, oh, it's gonna be a recession and depression, all this and that. Y'all, I'm gonna tell you, we were close. Don't count it out like we wasn't there. We were there. The market was in correction territory like twice. So, but with the news today that came out for the market, we rebound in stocks and we rebound in ETFs because of the good news that was needed and announced by the Fed chair, Jerome Powell. So thank you, Federal Reserve, for doing your job and staying focused at the meeting, because these folks were trying to get y'all all off topic with 47 and all the tariffs and all these distractions. But that man came out there. He stayed laser focused on the task at hand, and he did not waver to the left or the right. He did not fall for the trap of bashing 47. He did not even do it. He just stayed professional, stayed focused on the topic, and that's what we need. So we appreciate Jerome Powell for that. Now, going down, buying power, $22.20. Let's get into this portfolio, y'all. Okay, lifetime interest paid, we got $63.46. Look at the Bitcoin right now. Like I said, we ain't recovered every single thing. Bitcoin, before it went to the crashing, Bitcoin was up to like $90 a share, $91 a share. Oh, it was over $100 a share. My bad. It was over $100,000 a share. So, yeah, we still got a little ways to go. But you can see everything's up to the right, Doge is going up, Ethereum, Avalanche, Let's go down to the bread and butter, which is stocks and ETFs. One big stock I want to talk about that still holds a lot of weight in my portfolio is Walmart. Walmart's $86.60 right now. We increased in sales by 7.86% today. And then even in the aftermarket, we bought more, 0.32% in the aftermarket. I still got 112.52 shares of Walmart. Market value is back up to $9,744.31. Guys, once this thing, when Walmart was at $90 and $91, $92 a share, guys, my market value for Walmart was over $10,000. I really have over $10,000 invested in a single stock of Walmart, which represents excuse me, it represents 16.45% of my portfolio. Now, I don't want one certain company to get too big within my portfolio that is too big for anything else. But no, Walmart is actually proving itself to be a great stable company, not just a great value company, but it's been a growth stock, to say the least. Walmart has been a great growth stock, and it's not even a growth stock it's not even a Mag 7 stock. It's one of the best value stocks that you can have, and they're so resilient over the years, being able to battle back, fight back, and continue to push. So that's why I continue to keep them in my portfolio. Look, as you can tell right now, my average cost is $58.46. And in this position alone today, I made $113.65, or 1.18% increase. Total return, we're up to $3,166.34, or a 48.14% increase. Guys, I'm going to show you on the year to date what Walmart's looking like right now. We're still down by $3.38, almost down 4%. And we're still making returns of $31.66. $3,166.34, guys. We're still making returns like that, even though we're still down nearly 4% in this position. But like I said, that's the power of a great company like Walmart. You're going to continue to see it succeed. You're going to see it soar. And like I said, we're not going to make up all the ground that we lost in March because of tariffs and 47 causing chaos. We're not going to make it all up in one day, but we did get a positive outcome, we got a positive outlook by the Federal Reserve, which gave us that bounce that we needed in the market to have a positive green day. Now, what's going to happen tomorrow? You guys already know that the closer we get to the weekend, the closer the market likes to sell off. So I don't know. I don't know what Thursday is going to be like. It kind of depends on the news and the information that we get. If 47 comes out and get to talking crazy again, who knows? We might have another major sell-off. But if he doesn't and things continue to go, in the rallying position, we might keep going up to the right. It's just time will tell, so just let that be, let that do. Like I said, I got 112 shares. I'm going to continue buying more Walmart. I'm going to continue dollar cost averaging in. And I do, like, a lot of people want to know what kind of money do I put in these certain stocks. With Walmart, if I'm doing every week, it's like $50 a week. If I'm doing every 2 weeks, it's $100. So, excuse me. And that's how I grew my position right here in Walmart. Dollar cost averaging in. So, yeah. All right, next I would like to talk to you guys about one of my favorites, SPLG. SPLG is my SPDR portfolio S&P 500 ETF. That's my S&P 500, y'all. $66.95. We're up in today's market by 1%. We're up in the overnight by 0.39%. And that's what I like to see out of my S&P 500 ETF. Got 237.17 shares on the road to 300 shares at SPLG. And we're going to continue to grow that past that until we just, we are going to just continue to grow the S&P 500. Market value right now is $15,879.01. Average cost, excuse me, guys. Average cost is $64.35. This is like 26.79% of my portfolio. Now, I'm okay with having S&P 500 a bigger portion of my portfolio. Why? Because I'm investing in over the top 500 companies in America. I mean, I'm well diversified in this fund. So that's why I don't mind it being such a big part of the portfolio. As a matter of fact, I'm looking to add more to this each and every week. And so it's going to become even a bigger part of the portfolio with everything that's going on. Today in SPLG, we made $222.95 or 1.42% just in this fund alone today. Total return, we're up $616.46 or a 4.04% increase. So guys, like I said, we're not going to recover everything that we lost in March in one day, but we have took a great bounce in a positive direction, excuse me, because of the market. SPLG is another ETF that I'm going to be holding long term, and also is going to help us get the freedom, and so we can live off the dividends and we can live off passive income, and we won't have to work anymore. Give us more of our time, freedom, and choices, the big three that we want. And that's the whole purpose of why we invest, so we can have more time, more choices, and more freedom to do the things we want and to be with our families and not have to be on the job being controlled by somebody else telling you what to do all the time. Another ETF that's going to help us get the freedom, guys, is FTEC. That's my Fidelity Information Technology Index ETF. Right now, I'm trading at 168.39. And as you can tell, this thing is trying to get back up over that 170 mark, which is where it was at before the crash happened. We're up 1.43%. And even in the aftermarkets, we're up 0.01%. I got 15.57 shares of FTEC. Definitely got to get these numbers up in the shares column. We got to get more shares of FTEC. But it is an ETF that costs more to buy. Right now, market value is $2,622.77. Average cost is $173.31. And overall, today we made $37.38. Like I said, we went up by 1.45%, but overall we're still down $76.68 or 2.84%. But that's okay. We made positive gains in the right direction today in FTEC. We're going to continue buying more because right now it's still below our average cost, which is 173. It's at 168. So of course, the next time I get paid, I'm going to go and buy another block or another chunk of this ETF. It's our information technology ETF. It tracks the information technology sector. It has over 200 and I think it's 230 stocks in the fund. No, 297 right here. 297 holdings in the fund. And so it's very good in growth. It's a growth ETF. Big companies like Apple, Nvidia, Tesla, Alphabet, Class A, Class C, Berkshire Hathaway. You got major companies in this particular ETF. So we're going to continue buying, holding long term. That's a big boy that we're going to continue to buy. Next, I want to talk about NVIDIA. For you NVIDIA holders, we got some good news today. So NVIDIA stock took off up to the right. Right now, NVIDIA closed at 118.86, but it did reach a high today of 120. 120.24. Hold on. There it is. 120.24, which was up 4%, 4.84%. The market rejected it from that 120 position, dropped down to 118 ultimately, but it's okay. We got a dividend coming for NVIDIA. I got 54.71 shares right here. Market value is $6,503.98. Average cost is $118.26. And so we're up in a position. We made in this stock alone today $188.24. This went up 2.98% of the portfolio. And then we're up $33.42 overall in this particular trade. So not bad for NVIDIA. You guys already know I got part of my investment in NVIDIA in this particular portfolio. And then I got another part of NVIDIA in my traditional IRA portfolio right here, which is actually sitting at 8,300. Well, now 82 and 77 cents. As you see, it changed in mid stream right here. Today we are up in a traditional account $902.46. That's a 2.31% of my portfolio. Oh, and then even in the aftermarkets on tonight, we're up another $433. Wow. Woo. 1.08%. Even in the overnight, when big institutionals are buying, that's when the big institutional guys buy, y'all. I know we buy while the market is open between the 9:30 and 4, the 9:30 a.m. and the 4 p.m. mark. That's when all of us are buying. But big hedge funds, institutional investors, big billionaires, millionaires, money makers, money movers, these guys are buying in the aftermarkets and in the pre-markets. And look at this. I'm telling you, man, we made some money today. Like I said, the Fed Reserve came out today at that 2:30, 2 o'clock meeting. And, man, they put the paddle shifters on our chest, shocked us back, shocked the investors back up, shocked the economy back up. It shocked the stock market back up. And, man, just in this position alone, we've made over $1,300 in the traditional IRA account. Buying power, $476.53. I brought you guys over here to show you the other part of the video, which is, like I said, still get a dividend coming. Another 150 shares right here. Market value $17,835. Average cost in this position is $109.98. Today, I've made $520.50 or 3.01% in the position. Overall, I'm up $1,336.16. It just changed 8.10%. Guys, this particular stock is 44.57% of my portfolio. Why is it such a big spot in the portfolio? Well, because, guys, I got 150 shares. It's a major stock. NVIDIA is still the centerpiece that for the AI driven market. I mean, I believe AI is still the future. I believe that a lot of the Mag 7 companies are still buying Blackwell. They're still buying H100, H2 200, which is Harper 100, Harper 200. So Blackwell, the latest chips out from NVIDIA. NVIDIA still has the best chips. So that's why I still hold such a big position in NVIDIA. I believe that they're still poised to hit 150 a share by the end of the year. And so why not continue to let this company run, do what it do, and continue to make a increase in my portfolio. I got another 60.91 shares of SPLG in this account. I'm up $19.70 overall. This makes the S&P 500 makes up 10.19% in this account over here. My market value is $4,078.18. My average cost was $66.63, and so I'm gonna continue to buy and hold long term and let that continue to grow. I got FTEC over here as well, another 14 shares here. So market value $2,371.48. Average cost was $171.92. I'm up today, $33.80 we made today, but overall still down $49.72, which is 2.05%. We're going to get that back. Like I said, this is a good stock ETF to have. Over 297 stocks, technology companies in the fund. So we're going to continue to buy and hold. As you see, MicroStrategy got a good boost today. MicroStrategy boosted up because Bitcoin boosted up. That's what MicroStrategy tracks. It buys and tracks more and more Bitcoin. You can see the upright motion in the line graph today, where it went up $20.49, or a 7.24% movement in the upright position. And then even in the aftermarket, another $7.79, or 2.57% overnight. So all together, guys, this thing moved up over $28 in one day. It gained over $28 in one day. I got 15 shares of MicroStrategy. Market value $4,672.05. Average cost was $283.49. When I bought it, I thought it was a pretty good average cost. But when we went through the little tariff talk by 47 and everything went into the red, this thing was trading at like 263, 250 something. It was like down. But we're up today. Today's return, we're up $423.30. And total return overall, we're up $419.55, 9.87% increase. So MicroStrategy is doing its thing. All I had to do was hold on to it long term. Just be patient. You guys see the good things happen to those that wait. All right, next up we got Costco. Costco finally trying to battle back after a semi-good earnings report a couple of weeks ago. Costco is now $907.18. We went up $5.42 in today's market. Then even in the aftermarket, we went up another $3.71. That's over $8, over $9 in gains today in this position, in this stock. I got 4.00 shares of Costco. Market value is $3,632.80. At my average cost was $933.80. So of course, right now we're taking a little loss of 106.60, or 2.85%. My position is this thing only makes up 9.08% of the portfolio. So I'm okay with a loss right here. But we're just going to continue to hold because I do believe Costco in the long term, they have a great format, a great strategy, and I believe they're going to come back stronger than ever. And that cost, that 907 is definitely going back over 1,000. So we're going to continue to buy and hold with that. And guys, one more I want to talk about while I got you here. I know it's getting late, so I'm gonna go ahead and wrap this up. It's Palantir Technologies, $87 flat. We went up today $2.19, or 2.61% on the portfolio. Then in the aftermarkets, went up another 92 cents, 1.07% in the aftermarket. I increased my shares in Palantir, guys. I used to have 17 shares. I'm up to 25.72 shares. Market value is $2,238.07. We still got to buy more shares of Palantir because that's just common sense. I mean, this is a money printing machine right here. So if you don't know much about Palantir, Palantir is one of those companies. It's a governmental agency company that has contracts with the government to get certain technology things done. Let me see right here. I'm gonna read this for you. Software program. Palantir Technologies engages in the business of building and deploying software platforms that serves as the central operating system for its customers. It operates through the commercial and the government segments. The commercial segment focuses on customers working in non-government industries. The government segment is involved in providing services to customers that are the United States government and non-United States government agencies. The company was founded by Alexandra Sedingman Karp, Peter Andreas, and a couple of other folks. But anyway, that's what it does, man. That's what they are. Palantir, great company to have. Average cost $75.23. It's only 5.59% of my portfolio. Today we increased in Palantir by $80 or 3.71%. Total return, we're up $302.78 or 15.65% increase in the fund. So guys, Palantir is not out of the sight, out of this world. Not yet. It's only $87. My average cost is $75, and I'm going to continue to buy and hold DCA into this particular stock, just like I do Walmart. I'm buying it bicep over tricep, hand over fist. Every week that I get a chance to get paid, I'm going to be putting something into Palantir to get more and more shares of Palantir. Because you remember their earnings report back in February, end of January, February, something like that. They had an off-the-chain terrific earnings report. And now, to say the least, they did really, really good. Now, account right now sitting at $99,726.72. And if you guys remember, well, now we're at $99,805.91. If you guys remember, at the top of the prime of this account, we were all the way up to like 109,000 and some odd dollars. And that's exactly what we're going to get back to when the S&P, when we get back up to 61,000 points or whatever, 6,100 points in the S&P. We're going to get back there, guys. I didn't want, there's so many stocks and ETFs I got, y'all, that I could cover. But I only got enough time to cover certain things. But the main thing that you guys need to know is that the Federal Reserve, Jerome Powell, came out with great positive forecasts that 2 rate cuts were on the table, which is what stocks need in order to survive. That's what investors need for their assets to go to the moon. We needed great news, and we got it tonight. So, got it today. Any questions, comments, concerns, drop them down in the comment box below. This is yours truly, Katie the Investor, serving you and love bringing you guys content, new information, and things that's going on in the now. Got anything to say, drop in the comment box below. Share the video. Guys, we got to continue growing. We're over 2,000 subscribers strong. Let's go ahead and get to 5,000, y'all. We want to get to 10,000. We want to get to 100,000. But let's continue to grow our platform and our channel here until next time. Because, y'all, we on the road. We're on the road to $1 million in this portfolio. And you're going to see it. And I got some things I've been learning about the option trading. I got some things I want to bring to y'all, how to sell cover calls and keep your shares and also win money. I mean, not win money, but make money monthly and all that stuff. In future videos, it's coming. I promise it's coming. And I've been practicing it a lot so I can make sure that I know how to explain that stuff to y'all. So anyway, stay tuned, man. Y'all make sure y'all turn on your post notifications so you won't miss an episode. This is KJ signing off. Peace.